Mama, I can't say Hello, good afternoon. Hello. Precious, please, can you hear me? Hello, Precious. Could you kindly hear me? Hello. Yes, because I can see her. Hello, Precious, can you hear
There's
me,
something wrong
please?
with her mic. She needs to take off the mic or something.
Oh, okay.
All right.
Hi, Precious, can you hear me? Hello.
Precious, can you hear us?
Hi.
Mrs. Tony.
Okay, Mrs. T.
I'm here.
I think there's something wrong with her thing because we can actually see her, but
Yeah, we
can't
can't
actually
hear her.
So, go to Precious.
Okay.
I'm sending her a
Yes.
message.
Okay, please.
Hello?
Yes, we can hear you.
Precious,
Yes.
moderator, no, everywhere you don't respond. Oh, are you not hearing?
No, I'm not hearing anything.
But that is from her. She needs
I
to
think you
enable
will
her.
check up because Okasa Yeti offer what you are not responding.
Oh, okay. Let me check.
Hello, Precious, I think I can hear you now. Can you hear me?
Hello?
Hello, please, can you hear me?
They are muted from my side. Though.
Okay, can you unmute your microphone?
This is me muting. Hello?
Hello, can you hear me, Precious?
Hello?
Hello.
Hello?
I think she needs to sign out and sign back in and allow her speaker to pick up because she was using a microphone, so it was speaking from the microphone. So whenever she speaks, she can't hear us, but we can hear
But
her.
we can hear her. Okay.
Hello? Hello?
Hello, Precious.
My
Please, can you
microphone is
hear?
not. Hello?
Hello.
Yes, I can hear you now.
Okay. Okay, great.
All right, thank you.
You're most welcome.
Thank you.
All right. Good afternoon, everyone. You're most welcome to our team talk for this month of June. For the start of the meeting, we would like Mrs. Tony to share a word of prayer with us.
Okay, thank you very much. Heavenly Father, we thank you for gathering us together to be able to have this conversation around insurance. Thank you for HR department for always thinking about useful means for us to be able to better ourselves. We've heard about insurance over and over again. However, we still don't have the appropriate understanding. And we are grateful that we're going to be having this conversation today about it. May we be able to accept whatever the teachings will be and help us to make better decisions for ourselves, for our children, for our spouses, for our family members, even after we've gotten the information that we need. We're asking also, Lord, that even as we provide insurance for ourselves, some biases that people have in their minds that insurance means you're thinking of something bad happening to you will also be broken. It's about protecting and not about thinking of bad things happening. May we all have a better understanding of what insurance is after today's conversation, and may we make better decisions for ourselves. In Jesus' name we have prayed. Amen.
Amen. Thank you very much, Mrs. Tony.
You're
We are
welcome.
grateful to you. She is the
Thank
host of African Women's Voices on ETV, and we are grateful to her for joining and sharing a word of prayer.
Thank you.
Dear team, so it's like I said earlier, it's another month, and as we always do, we have various themed months of talk that we have to better ourselves, like Mrs. T said. We've also heard of insurance so many times. There are so many diverse parts of insurance that we may have heard about. But on this call this afternoon, we have somebody who is going to share with us the principles of insurance, and she is very, very knowledgeable about the industry. So she will educate us the more on what we need to know. But before I go on, let me introduce myself. My name is Vida. I'm with the HR team. And we have on this call, we can see a pretty lady. She is Precious Abatexen, as we can see on the call. And to her credit, she has worked with Enterprise Life Insurance from 2009 to February 2020. And for the past 13 years, she has been in the insurance business. So like I said, she has a lot of credits in the insurance industry. So she was the sales manager for the broker department at Enterprise Life Insurance, but she is currently with Hollard Life, and she's the sales manager from February 2020 till now. So she's our facilitator for this afternoon, and we are very much pleased for her joining us. Thank you so much, Mrs. Texen, for joining us. We are grateful again, and you have the floor. Thank you.
Thank you so much, Vida. I'm so grateful for the opportunity giving me this afternoon.
You're welcome.
I'm already part of you. In fact, Hollard is part of you. We've had a couple of opportunities to have businesses with you. So we are not too much of strangers. We know each other already. So thank you once again for the opportunity. All right, so I would like to have just let us understand certain bases or principles of what insurance is. And sometimes we tend to mess up what insurance is, what is going on. Sometimes people have these negative perceptions about insurance companies and what we do. And I won't blame anybody. Maybe we can put the blame on all of us, both the company and the public. Maybe we haven't gotten the opportunity to learn more, taking our time to get to know or understand certain facts and principles we all have to adhere to. So this afternoon, I'm going to take us through what the principles of insurance is. We basically have 7 principles that we all have to know before we sign up onto any insurance, or any insurer that you meet will also have to have all these things in mind so that businesses between all of us will go on well. So when we say insurance, I'm sure we have ideas of what insurance is, or we may have basic ideas, but it is, like the sharing, risk sharing among group of people. So I would say personally that insurance is a pool of resources from people, such that if anybody in that pool should fall short or face any misfortune, then whatever we have benefited or contributed in that pool can be used to compensate the victim out of the pool. And so since we know it's a pool, at least we should have some basics idea of what. I would like to share my screen so that we all see what I have with me. So I'll share my screen. Sorry, I think I can't share the screen. If you can help me share. It's telling me that host disabled.
It's enabled, please. You can share your screen now. It's enabled.
Okay.
Thank you.
Okay. You're welcome. So can we all see my screen?
Yes, I can see your screen.
Yes, I can.
Okay. Okay. So like I said, we have these principles that we all had to adhere to. Apart from the fact that we know what insurance is, we should also know and appreciate these principles so that one will not feel he or she has been disadvantaged or taken advantage of. So, like I said earlier, insurance policies are contracts that provide people with financial security and protection from future uncertainties. In order for the relationship between the insurer and the insured to work, however, there are certain important principles that must upheld to. So these are the various principles that we have. Like I said, there are 7, and I'll take them one after the other. So when I'm done, if you have any questions, you can ask, then I explain to you. Now, we have the first one as the insurable interest. We have indemnity clause, indemnity, we have contribution, we have subrogation, we have utmost good faith, we have proximate cause, and then loss maximization. So when we say, So when we say indemnity, the principle of indemnity ensures that an insurance contract protects you from and compensates you from any damage, loss, or injury. The purpose of an insurance contract is to make you whole in the event of loss, not to allow you to make a profit. And I'm sure a lot of people do not accept that when you get to talk to them and you say insurance is not to make you make a profit. And people will be like, it's after all, it's my money that I'm giving to you and you're going to use for business. So why don't I make profit from it? But then we'll get to understand why you should not make profit. Thus, the amount of compensation for a loss is directly related to the amount of loss that you actually suffered. So for instance, I bought a car worth 20,000. If I am insuring this car, I'm insuring such that if the unforeseen happen or occurs, that 20,000 should be given back to me. Do you understand? I should be put back to where I was before the unforeseen happened. So it is 20,000. I do not expect that the insurance company will compensate me by giving me 30,000. No, that's not how it's done. It is the same 20,000 that the insurance company has to make sure that you get, because why? You bought the car 20,000 and it's your car, although you are using the car. So if it is worth 20,000, why would you expect me, the insurer, to pay you 30,000 when there is a loss? Please, are you following?
Yes. Yes, please.
So it is not for you to profitize. It is for the insurance company or for you to be put back to where you were before the incident occurred. So the next thing is telling us that that's the amount of compensation for a loss is directly related to the amount of loss that you actually suffered. The principle of indemnity, therefore, restores you back, like I said, to put you back where you were before the incident occurred. So restores you back to where you were before the loss occurred. So you were having 20,000. We'll put you back to you still owning your 20,000 or having your 20,000 and not more. Of course, I'm sure you also wouldn't want to get less. So it is all something that we should all adhere to, so that we know that I am getting my 20,000, I'm paying her 20,000 back, and not expecting that you pay me less, or I'm also not neither expecting that you also get more. It is for you to be put back where you were until the incident occurred. So I'll go to the next. Sorry, the next is contribution. That's the next on the principle, the second principle, that if we are signing on to an insurance policy, you should know. Mostly you get people asking you, so can I do, let's say, a funeral policy with say Enterprise and come to Hollard and still do a funeral policy? And I say yes, you can do that. When it comes to life, you cannot place value on anybody's life. I cannot say that you are worth 20,000 or you are worth 50,000. The way you would think you are worth may not be how I deem you worth of. And so you cannot place value on somebody's life. But if it is an object and it's this phone, you know that I bought this phone maybe 1,000, or I bought this phone 1,500. So I can place value on this phone, but not on anybody's life. So you meet people asking you those questions. Can I do, let's say, an insurance for my parents, a funeral insurance, and also go back to maybe another company and do it? And I tell you yes. But when it comes to this phone, it is not done. When it comes to this phone, you cannot insure this phone, the 1,500, and expect that when you go to Enterprise, you insure the phone 1,500 same. And when this phone gets missing, then you expect that Enterprise is going to pay you 1,500, so that Hollard also pay you 1,500. And just like the indemnity cost stated, that insurance is not for you to profitize. It is for you to be put back where you were. And so contribution here states that it is similar to the principle of indemnity. And it applies to situations where you have more than one insurance policy for the same asset on or entity. Sorry. You have one insurance, multiple insurance on the same asset or entity. For example, imagine that you own a truck that is insured by both company A and company B. If another truck hits your truck and it will cost 5,000 to fix it, you can submit your claim to company A and company B, or to both. So you can either submit to any of them or to even both. If company A compensates you fully, then it can claim a proportionate contribution from company B. What this basically means is that you've insured your car or a truck and there was a loss that is worth $5,000. Now, when you wanted to insure the car, you went to company A and then you insure the same, let's say, at 30,000, you went to company B, insured 30,000. Now the loss or the damage that has been caused is worth 5,000. If you want to claim, it is for you to get exactly 5,000 and not more than 5,000, even though you insure with two different companies. So what will happen is that you can put in claim with both companies, but if something happens, when you put in the claim and the insurance companies are paying, company A can pay 2,500, company B can also pay 2,500. But if any of them should pay the full amount, then what will happen is that you have to go back or the other company will have to go back to take the proportionate claim. So the other part, which is the 2,500 that is left. So you insured with Hollard, for instance. Hollard was supposed to pay you 5,000, but the same car you went to Enterprise to insure. Now, what will happen is that instead of Hollard paying 5,000 and Enterprise paying 5,000, the two has to come together, pay 2,500 and the other pays 2,500. But in case any of them pays the 5,000 in full, then it means that the other company has to get their own proportionate from the other party. I don't know if you are getting it. However, if both companies compensate fully, you can't keep the amount and turn a profit, because this would amount to an unfair windfall and violate the principle of indemnity. So the principle of indemnity is to put you back where you were before the incident occurred. Now, coming back to principle of contribution, the two has to put the money together or compensate you half here, half there, put together so that you get your full amount, but not pay full and leave you to have the full amount. No. So I pay 5,000, Enterprise pay 5,000. No, it means that you are getting 10,000 and you are not supposed to get 10,000, but 5,000. So please, if you have any question, you can ask me before I move on with these two principles, the indemnity and the contribution, before we can move forward.
Precious, I think for the sake of time, we would like people to put their questions down after the entire presentation, then we would ask questions.
Then, okay, that's fine. So the next one is subrogation. Subrogation means substituting one creditor for another. Principle of subrogation is an extension and another corollary of the principle of indemnity. It also applies to all contracts of indemnity. According to the principle of subrogation, when the insured is compensated for the losses due to damage to his insured property, the ownership rights of such property shifts to the insurer. So what this means is that principle of subrogation is an extension and another corollary of the principle of indemnity. Just like I said, you are not supposed to profitize. You are supposed to get exactly what you were supposed to get or where you were before the incident occurred. Now, this principle is saying that when the insured is compensated for the losses due to the damage to his insured property, the ownership right of such property shifts to the insurer. So, like I said earlier, this car is worth 30,000. I insured with company A and then company B. I insured with Hollard and I insured with Enterprise. Hollard paid the 30,000. Meanwhile, Hollard was supposed to have paid maybe half of the 30,000. Now, what will happen is that you will no more have any issue with the insurance company. It's the two insurance companies that has to deal with each other. That is why normally when there is an accident, motor accident, they start taking pictures. People start taking pictures, and sometimes we do not understand why. They take pictures, ask whose fault is it? Whose fault is it means that even though I have done an insurance, a comprehensive insurance, insured my car, and you've come to hit me, and you've also gone to another company, insured your car. We have both insured our cars, yes, but the insurance company is looking at the fault, the cause of the accident, or whose cause made the accident, who was the cause of the accident that occurred. So normally what will happen is that you can write to your insurance company and then they pay you your claim. But what will happen is that because it was the cause of the other person from say, sorry, I'm still using the two insurance company because that is where I work and that is where I worked before. So I have insured a car with Enterprise. I have insured my car with Enterprise. And maybe Vida has also insured hers with Hollard. And Vida comes to hit my car. I was going somewhere, Vida hits my car. It is not my fault that the accident occurred. So you do not expect my company to pay for the damage that was caused. But notwithstanding, because I have insured my car with Enterprise, they would pay. But then that is why it comes in, the questions of whose fault is it comes in, so that Enterprise will now deal with Hollard, since it was Hollard's fault that the accident occurred. So Vida is from Hollard. So Vida was the cause of the accident. So what will happen is that Enterprise now will deal with Hollard so that they can get their money back from them, even though they have paid Precious and Precious has walked away. Because normally, if it doesn't happen so, then it will be like, why should I insure my car with you and you do not pay me when there is a damage or there is an issue? So then it will be like insurance is not truthful and so on and so forth. So what will happen to bring peace and for everybody to follow what the principal is saying? My company will take care of the damage. Then now the right of the property will now shift to my company so that they will now deal with the other insurer for their money to be paid back to them. Under the principle of subrogation, the insurer, under the principle of subrogation, the insurer, the insurance company can stand in your shoes and recover the payout of the negligent party, just like I just explained. Now, Otomo's good faith. We all, maybe one way or the other, have idea of what Otomo's good faith is. So it is basically about honesty. Honesty. In everything that we do, we should be honest with it. So we expect that the insurance company will be honest with whatever promises they are making to us, and vice versa. So the insurance company is also expecting that whatever information that you want to give them will also be accurate. You'll be faithful and honest with it. For instance, I meet people telling me that, oh, Precious, I want to insure my parents, but my parents is 80 years. Can you do the insurance for me? And I tell you, no, I can't do it. I can't do it in that the how do you call it? The age limits of, hello? Hello?
Hi, hello.
Okay.
Please, we can hear you.
All right. The age limits for Hollard is that you can insure, or a policyholder cannot be above 75 years. So it is expected that before you insure your parents, this parent should not be above the age of 75. So for instance, 76. The moment a person crosses 75, he or she is not eligible to be covered on our policy. So we expect that as you are bringing us the person's age, it should be accurate. I mean, of course, some of our parents do not really know their date of birth. And so that accuracy may not be there, but at least we have an age bracket. You know that from maybe 51 to 55 is paying this amount. 56 to 60 is also paying another amount. So the two do not pay the same amount. The two age bracket do not pay the same amount. The one that is younger pays less than the one that is older. So for you to, how do you call it? Skip the payment of the actual premium because you think you want to pay less, or because I think I want to pay less, I want to outsmart the insurance company. Then I say that, oh, let's do it 51. Meanwhile, I know my parent is almost 60. Or like I said earlier, let's do 76. Meanwhile, I know my parent is, let's do 75. I know my parent is 76 or even 80. But because I still want to cover this parent, I tend to lie or I tend to hide the truth. And sometimes you get people trying to lure you into it, trying to thinking that, oh, you should help them, or you should be helpful. This is what it is, but then they wish to do it, and the person is older, but unfortunately, they didn't know, and so all those words comes out. And if I join you to give that premium, I mean a premium of a 75-year-old person, whereas a person is even 77, then I'm helping you to lie to the company. Because at the end of the day, the day you go and make the claim, your document will show that really the person was not that age. The person was above the age that you gave me, and that will cause issues. So why would I have to help you to lie? Why would I help you to lie when I know that at the end of the claim, at the end of the day, if you are coming to make claim, your money will not be paid, or some of these insurance, perception that we have, that for insurance, when you're going to make claim, that is when you see the real character of the people. They do not want to pay the money. I don't think insurance is there to rob anybody. I don't think myself, I am there working with a company because I want to rob them. I want to help people. That is why I do this job. That is why I enjoy doing this job. So people should be truthful, so that we give the actual information that we are supposed to give. So utmost good faith here is saying that insurance contract always require both parties to have the to act with the utmost good faith. Sorry. Insurance contract also requires that both parties act with utmost good faith. This means that both parties must accurately and fully disclose all material information. So your parent is 76, and then say your parent is 75, when you know very well that your parent is 76. You don't do that, because at the end of the day, you are supposed to even pay a premium of a 76-year-old parent and not a 75-year-old parent. So at the end of the day, when you come, it is either there are certain time that the insurance company will deduct all the differences of premiums that you should have paid, or may not pay at all. It will be at their own discretion to decide, especially when the person is not eligible. The person wasn't eligible to pay, to sign up on the policy or to become a policy holder. The other part is telling us that this not only ensures fairness, but also helps insurance companies accurately price premiums for the insurance applicant. Like I said, every age has this premium that they have to pay. Or you don't buy a car worth 40,000 and you come and tell me you are insuring it for 50,000. So that you know that at the end of the day, when you're going to make a claim, you make a claim of 50,000. Indemnity says that you are not supposed to profitize. So if the car is 40,000, it's 40,000. Don't tell us that it's 50,000 so that you make a claim of 50,000. Let's be faithful with what we do. In the same way that the insurance company too, you told the person that, for instance, do a policy, a family plan, and I will cover you, and you pay a premium for a benefit of 100,000. You are also expecting that when the unforeseen happens, the 100,000 should be paid and not less than 100,000. Because if I pay less than 100,000, you can also take me on. Do you understand? You can also take me on. Which, I mean, in terms of me as in the insurance, the insurer, you can take me on because I was also not faithful to you. I lied. So for all of us to be happy, for all of us to enjoy what we are doing, you should be faithful to me and I also be faithful to you. If I tell you I'll give you a benefit of 100,000, it should be 100,000. And if you also tell me that the person is 56, it should be 56, and not 70, and you'll be paying the 56-year-old person's premium, because the premium differences are there's difference between the premiums. Then it says that insurance policies can be declared null and void if an applicant made a misrepresentation of material fact that was relied on by the insurance company. So, like I said earlier, they can decide to make a null and void, or they can decide to deduct the difference of premiums. So it is at the discretion of the insurance company. And at this point, sometimes people will think that, oh, it was a lie, they lied to me, and forgetting to know that you also did not give the accurate information. So for all of us to be safe, at least we should also, because like I said, it's a pool. So if you are insuring something worth an amount, it is not your money that was paid, that you paid, that the insurance company is giving back to you. Let us always remember this. I did a policy. I paid 100 cedis premium every month for a cover of 100,000. Now, what will happen is that if I should die and the insurance company is paying the 100,000, even after a year or 2 or 3, it is not my money that is being paid back to my beneficiaries. No, it is other people's money from that pool that was within that is going to be used to pay my beneficiaries. So at least let me be faithful and give what information I am supposed to give. If I am supposed to pay 150, I don't come and do some kululu, forge certain things so that I pay 100 cedis instead. No. So that is what the principle of utmost good faith is telling us. Let us all be honest with the information that we give. Now, the next one is the proximate cause. The principle of proximate cause or nearest cause comes into play when more than one event or bad actor causes an accident or injury. So this is saying that the principle states that to find out whether the insurer is liable for the cause or loss, the loss or not, the proximate or closest, and not the remote fires, must be looked into. So an example is here. Let me read the example. I can give another example too. It says that an example would be if 2 separate landlords carelessly burn a pile of leaves and the fire eventually joined together and burned down your house. The insurance principle of proximate cause dictates that nearest or closeness cause should be taken into consideration to decide the liability. Now, 2 people are burning their farm or pile of leaves. So let's say, for instance, where Happy FM is. Sorry, let me not use it so that somebody thinks that I'm bringing negativity. So let me not use it. So let's say, for instance, very good. The June 3rd incident that occurred at Circle. There was a rainfall. There was a flood. But was it a flood that killed people most? Now the insurance will look into it. What actually caused it? And to me, I think the nearest the proximate cause was a fire, the fuel station. Because every day there is flood, we walk through the flood. To those who will swim in the flood will swim. But what actually happened at that point? What really caused the death of the people that we lost was the fire. And what caused the fire was the fuel station. So the nearest cause of the incidents that occurred is what we are looking at. Some people get involved in accidents and lo and behold, they get to the hospital, they die. Sometimes it's not the accident that killed them. So the accident is the farthest or maybe the farthest cause, but The proximate or the closest cause may be the handling of the people to even the hospital. The way they took them out of the car or the damaged car could even be the cause of their death. Or when they got to the hospital, then the person rather fell from the stretch, the hospital stretcher. That may be the cause of the death. So I'll use my own father as an example. My father died on the 4th of November, 2020. And for instance, when you do our family plan or the funeral policy, there's a waiting period of 6 months. But I did the policy and he died, I think, a month after. But before he died, or before he was rushed to the hospital, he fell. Normally, the waiting period is 6 months. So you are supposed to have at least paid for 6 months and beyond before you qualify to benefit. And if it happened after 6 months, then whatever that caused the death, you don't have anything to worry about. We'll still pay because we said 6 months waiting period. But if it should happen within the 6 months, so like a month or two after you sign onto the policy, you started paying your premium and the person died, it's not up to 6 months. So we won't pay. Somebody will ask you, so what happened to my money? We won't pay and won't give your money back. In the same way that if the death was caused by an accident, we will pay. Even if it was a week after you paid your first premium, we will pay. Because why? The proximate cause at that point was not the fact that you were sick or something, but because there was an accident. And we are saying that there's no waiting period for accidental death. So my father fell, he fell onto the building, shook, that we thought something had fallen. But when the cause of death came, I was thinking the cause of death was going to be accident so that I would make my claim, even though I sell insurance. But I was praying. I was not praying for him to die. I'm talking about after he died, and I was going to collect the cause of death from the hospital. I thought it was going to be accident, but unfortunately, it wasn't accident. The cause of death was the stroke. So that was what was stated on the document that the hospital gave me, stroke. They said massive stroke and then hypertension. And I think, what's this sickness of? I've forgotten. Massive stroke, hypertension, and pneumonia. So that was what killed my father, and not the fall that he fell. The doctors were like, so I was trying to challenge them. I said, but he fell. So that should be the cause of death. And they said, no, it was actually what was within him that threw him down. And in fact, when he fell, so he didn't die on the spot. He was hospitalized for about a month and 2 weeks before he died. So at that point, I was told that the cause of death was not the fall, but the stroke, because it was a massive one and it went into the brain, and that killed him. So normally when we are looking at some of these things, we should know what actually caused what. Who pushed the person? It is not the fact that the person was sick, that was why he died. But maybe even though he was sick, he slipped and he fell and his head hit the ground, or somebody beat him, and that caused internal injuries, and that was what killed him, but not really the sickness that he was, suffering, or the accident that even occurred. So when we are looking at liability, whose fault is it? Who should we claim? Who should we hold responsible? It is not the first fire, but it is because of the next one, the next pile of leaves. So the first person, if his pile of leaves had finished burning, and if not for the fact that another person also had piled leaves, the fire wouldn't have run into it to even get to your house in the first place. So that is what the proximate cause also let us know or explains to us. Now, the next one is the loss minimization. It says that as the owner of an insurance policy, you have an obligation to take necessary steps to minimize the loss of the insured property. The law doesn't allow you to be negligent or irresponsible just because you know you are insured or you have an insurance policy. So because you have an insurance policy and you see a truck coming and you run into the truck. No, I'm sure we might have heard one of these things. Somebody say that, oh, I've done insurance 3, 4, 5 years, motor insurance. My car has never gotten involved in accident. No, you did not do it because you want your car to get involved in accident. You did it so that when it gets involved in accident, at least you know that you are secured. You've made provisions for unexpectation. But they'll go ahead by telling you that claim. So what if you hit the car against a wall? Yes, you can come and make claim. But what if you yourself, you don't even survive and you die? When you've insured a car, it is a car that we are going to pay, compensate for or pay claims for. But what if the human being in the car dies or gets severely injured, that even if insurance company compensates you, but you do not work again? Or you see that your house is burning, there's a fire outbreak, and you stand there and watch because you have an insurance policy. So you also be negligent and watch so that the fire will continue burning and burning and burning. So for example, if a fire breaks out in your kitchen and you have an obligation to take reasonable steps to put it out, like using a fire extinguisher or calling the fire department. You can't just stand back and allow the fire to burn down your house just because you have an insurance policy. You can't. I don't even think anybody in their right sense will see their fire burning, their building burning or caught fire, and they watch it burn down just because they have insurance. No. So it is your own responsibility. And that is when, if it is proven or it is really established that it was deliberate action or it was a negligent action on your part, then the insurance company is not obliged to pay. At least call 1 or 2 persons. Let's know that, yeah, you tried, but the people came late, the firefighters came late, and for that reason, the building burned down to, beyond repair, or it damaged everything, to ashes. Then it wouldn't be your fault. Or you call 1 or 2 persons in your neighborhood and he started throwing water or whatever that you think you can use to quench the fire. You did it. But not to stand and just watch because I have, it's as if a Christian, you are praying, yes, you know that you are praying. You pray that God should give you the knowledge, wisdom to be able to get your exams right or pass your exams. And you don't study. As you are praying for wisdom and knowledge, you study so that you get that wisdom and knowledge. Because the Bible, the book, your head cannot be open for the book to enter. It is, first of all, your own responsibility to learn. Then you can ask for that knowledge and wisdom, divine one, so that whatever you have learned, you can put down on the paper. So just like we can't do those things, it's the same way that when we have insurance policy, we do not be negligent about it and say, oh, they are deducting me. And you see that deduction is not going through for some time. So it is not your responsibility after I've given my bank details. But of course, you see that every month, your salary that comes in is the same amount you go for. Or your money is your account, you are using it, and you realize that deductions are not being made on the insurance policies. So you too, what are you supposed to do? Of course, the insurance company has a responsibility to notify you, but you also have a responsibility as the owner of the insurance policy to also notify the company that, oh, my premiums are not going through. You people are not deducting me, so that we know that we are not deducting you. For you know, it's an oversight. we are managing everybody's policies. I mean, a lot of people policy. You are responsible for just your own policy. So at least it is your own responsibility as well to notify us. So we all play responsibilities. I mean, we all play some responsibilities when it comes to our policies, when it comes to our investment, when it comes to what insurance we have done. So that was the last one, loss minimization. Thank you. If you have any questions, you can ask me.
Oh, thank you very much for the insight into the principles of insurance. I'm very sure those of us on this call, we've heard about it, but we've not paid close attention to these principles. Some of us have insured our cars, our lives, and other policies that the various companies may have. But this is an eye-opener for us, and we want to say thank you very much. For the record, Precious, we are not only 5 on this call. We have a YouTube link that some of our staff have also joined in, so to minimize the interferences that may come in. So please do not think we are only 5 on this call. We have another link that most staff have joined in. So a question that came through from Mr. Lee Daniel Wilson, and he would like to know on the indemnity, that mean it is not recommended to insure an asset with 2 companies, that is 2 insurance companies at the same time. He would like to know.
Yes, please. It is not. It is not at all recommended. So that is why I think day before I said something, someone was asking me, they sent me a message asking whether they can have a funeral policy from one company and have one with us. And I said, yes. So when it comes to life, you cannot place value on life. Like I said earlier, you cannot place value on anybody's life. So for that, you can insure here, go there and go there and go there, whichever insurance company you want. So that at the end of the day, you claim wherever you want to claim from. But like I said, since it is not for you to profitize, those that you value on your object to profit.
Hello, please. Your line wasn't clear earlier.
Yeah. Oh, yeah. The network went down. All right. So what I'm saying is that when it comes to life, it is not like that. You can do as much as you want policy. I mean, many policies that you want. But if it is anything that you can place value on, you can't insure your motor insurance, your motor with Hollard, go to Enterprise, go and insure, go to Star and go and insure. Because at the end of the day, it brings upon confusions, who is liable for what and all that. So the best thing is just stick to one, so that at the end of the day, you just take your money and then you walk away. I hope your question is answered.
He asked on YouTube, and I'm hoping he gives a thumbs up on that. But I want to ask a follow-up question from what you made mention of. So if you have your for values and items that we can place value on, you can insure with one, but for life you can insure with so many multiple companies. What is the so can I say I would insure my life with a whole lot for maybe 1 million Ghana cedis, insure with Star with, let's say, 2 million Ghana cedis? Is it possible?
Yes. So mostly the policies that we have are mostly funerals and the normal life that we have. So for instance, we have a cover of 100,000 for the family plan, 100,000 currently. Now we have a limit when it is within our company. We tell you that if we pull all your insurance, your life insurance, which is the family plan, you are not supposed to get above 150,000 Ghana cedis. So if, assuming you sign on the policy, and then you add your spouse to your policy. So you did 100,000 for yourself and did 100,000 for your spouse. And then coincidentally, I go another place and meet your spouse. And he said, oh, I'm interested. He does the policy for himself, 100,000, and covered you on 800,000. What it means is that it is 200,000, right?
Yeah.
In case there's the unforeseen, the event, we'll have to claim 200,000 for both parties. What we are saying is that with Hollard, with the family plan, it is limited to 150,000. So what we'll do is that we'll pay you the difference in terms of your premiums. So you paid a premium, the two of you paid a premium towards a 200,000, but you are supposed to get only 150,000. So we'll pay you the rest of the premiums so that you know that your money hasn't been stolen after all. But if you walk out of Hollard, you can as well go to Enterprise, go and do a policy that also gives you a benefit out there, maybe 100,000 or 200,000, whatever you want. You can go to Star and do it, same. But
Hello, Precious.
Comes to your car insurance, which is 100,000 with Hollard, another 100,000, and go to Star and go and you 100,000 each thousand. No, the car is worth 100,000, and it's 100,000 you are supposed to get. It is not for you to profitize, because why? We can place value on the car. So to how do you call it? To avoid all those discrepancies where I need my money, will not pay, and all those things. It's best you just insure with one company, because at the end of the day, it is 100,000 you're going to get. You can't get above 100,000 when it comes to property, when it comes to objects. Yes.
Okay. I have another question. I think it was on the ultimate good faith. If an insurer is being taken on and there's an amount that the person paid a premium for a cover, an amount cover, can the one who is taking the insurer on claim for an amount higher than what he was paying the premium for, or can the amount be higher than the cover that was expected?
With this, it would depend. Sometimes when these things happen, NIC gives directives. Okay, they look into it. Maybe you'll be charged with damages and all that because the person has been stressed, going up and down and all that. But if any of these do not happen, what you are supposed to claim, if I'm getting your question right, let me come back again. So for instance, does it mean that, let's say you do a policy for a 50-year-old person and you are supposed to pay maybe 100 cedis for that person, but you instead of paying 100 cedis, you paid 80 cedis for a benefit of 100,000. Is that what you are talking about? Like, and let me get your question again.
I'm
please.
giving an example of where the insurer was taking on for something that he should have done and for the client and didn't do. So in the court of law or something, I pay for an amount more than what I'm supposed to cover, get in my cover in the insurance policy.
Okay, I get you now. Yeah, that's what I'm saying. That it depends. It depends on how far you've got into. It depends on what happened. So mostly it's ideal to go through NIC when you want to take an insurance company on.
Okay.
Sometimes it can be settled right there. So looking at what happened, they can determine if there are some damages that it has to be taken care of. It would be. So it depends on what happened.
Okay. Thank you very much. Please, those of us on the call and on YouTube, if you have any question, you can send to me so that we can get clarity on. If you're on Zoom, Mrs. Tonya Evanes, BK, you can also ask your question, and then if not, we will bring the meeting to an end. So for the next minutes, we'll hold on if there's any question coming in.
Please, any
Okay.
more questions?
Let me say that the one who asked the earlier question on the indemnity, whether you can insure with two companies, he said he's all right with it. Thank you very much, Precious.
Thank you too.
Okay. Papa, please, do you have any question? If you can hear me. Okay. All right. It appears there isn't any question coming in. So we'll say a big thank you, Precious. I believe we've all got deep understanding into the principles of insurance. And if I'm clear, Precious, this covers all the various insurance, whether life, motor, or any other insurance there may be. So we want to say a big thank you. Precious,
Yeah.
am I clear?
Yes, it does.
Okay. Okay.
It does. Yes, it does. But then, like I said, some of it when it comes to life, just like the indemnity, where you are not supposed to profitize. And like I said, when it comes to life, you cannot place value on life. So just some few to some of the policies, but if not, they are the same. It goes for all.
Okay. All right. On behalf of Global Media Alliance Group, we want to say a very big thank you to you for giving us the platform to always come to you when the need be, and also for this opportunity to educate us on the various principles of insurance. We are grateful to you. I'm sure if any team member requires any assistance, we won't hesitate to call on you, Precious. We are very grateful to you and the team at Hollard. As for GME and Hollard, we are very good friends. So we hope the relationship will continue. So thank you all for the team for joining us. We will come your way again next month for another exciting team talk. So on behalf of the HR team, we want to say good luck and thank you all for joining. Thank you, Precious. We hope to meet you again soon.
Thank you too for the opportunity.
Thank you.
Thank you.
You're welcome.
Bye.
Bye.